To remain updated with the latest business news, click on the bell icon.
With the market scaling new highs every day, we continue to take a few select questions every week to help you understand how to better strategize and make sound investment strategies at a time like this. The question, of course, can be sent in on the number on your screen, and we'll take a few every Wednesday. Let's begin. Our first query this week is from Shreya Srivastava. So let's go across. Shreya is from Kanpur. Listen into her query.
Hi Udin, what is your medium and long-term view on HDFC Bank? Thank you.
Well, HDFC Bank has been one of the bluest of chips, if not the bluest chip in the market for the last 10 or 20 years. People have made a lot of money. But I think it's not gone unnoticed that in the last 1 year, the stock has been underperforming. I mean, it's probably up 14% over the last 1 year, while the Nifty has done much better. This is very, very uncharacteristic of the HDFC Bank stock. If you look at the recent quarter numbers too, the numbers were not bad at all. There are clear signs that there is a recovery in loans. They are back to that 15-16% kind of level. Asset quality is not bad. Net interest margins remain very steady. But there seems to be some kind of disenchantment about HDFC Bank. Now, there could be technical factors at play. Because of these large digital unicorns which are doing their IPOs now, there could be money which is being pulled out of some of these old HDFC banks of the world, which is being put into some of these IPOs. That may well be happening. But even otherwise, there is a feeling, and this is the one important thing in determining whether you should be owning HDFC Bank or not, is that after many, many years, we are having a revival in the capex cycle. Now, HDFC Bank traditionally, while it also lends to large companies, is seen as a retail bank, retail-focused bank. And therefore, a lot of investors correctly are asking whether it makes sense after many years to look at the ICICIs and the SBIs of the world, which may deliver superior returns to an HDFC Bank or even a Kotak Bank. That is the very material fundamental question, that HDFC Bank remains a very good investment option, but during capex cycle recoveries, some of these more corporate-facing banks actually tend to deliver better investment returns. So if you own the stock already, you can certainly keep holding it because it is a very strong franchise. But if you're considering what else you could buy, I would submit that you could probably give ICICI and State Bank of India a look, because in the foreseeable future, their prospects look as good, if not better, than HDFC Bank.
Okay, here's Supriya from Faridabad. Let's listen in to this question as well.
Hi Udyan, what is your view on BPCL? I want to buy for the long term.
The short-term answer is easier on BPCL because in the next 6 months, while clearly you know that the divestment process has not taken off in a way that people were expecting, it's gone a bit slow, and I really think 1 year ago people would have said that BPCL would be sold ahead of Air India, but Air India has got done, but BPCL we are nowhere near the completion. So keep your fingers crossed and hope that by March next year BPCL gets done as well, because that is really the big trigger for the BPCL stock. The hope is that in the next 4 or 5 months the government will get its act on BPCL together and it will go at a significant premium to the current market price, and therefore it will give a fillip to the BPCL stock for secondary shareholders like you. Even otherwise, the way gross refining margins have been moving up, I think BPCL should be trading at about 500 rupees. It's at about, what, 430-ish now? But left to itself, without divestment too, the fundamental fair value of BPCL in my book is probably north of 500. But I think everybody's waiting to see what the divestment news is like before taking a more substantial call. Longer term, fossil fuel companies, one cannot be terribly bullish on over a 5-7 year period time frame. But I think if you are thinking of the next 6 to 8 months, it may probably make sense to hold on and see where this divestment news actually, how it pans out.
Okay, here's the next one then. We've got Vedant writing in from Chennai. In fact, let's listen into his query. Vedant?
Hi, what's your view on the EV market in India for the next 5 years? Say, for example, Tata Power as a company. I have few shares of it and probably will be accumulating more in the future. So where do you see Tata Power 2 in the next 5 years? Please do let know. Thank you.
Well, Tata Power is trying to move into the space more aggressively. the one that you're talking about, renewable energy. And of late there has been a lot of excitement because there was a news article which suggested that BlackRock is picking up a significant stake in its renewable energy subsidiary. I think that may have been the reason why the stock moved as it has. I mean, it's been a one-way move from 140 to 240 in Tata Power, and I believe that BlackRock has denied that news, and so has Tata Power. So maybe that deal is not happening in the near term. If that is the case, I think Tata Power needs to catch its breath as a stock. It's had a one-way rally. I think at 240, many of the positives are in the price, and it's probably trading at 40 kind of P multiple in 2023, which is very lofty for a company like Tata Power. One must also realize that a large part of its assets which generate revenues today are actually coal-based assets. And given ESG concerns, etc., I think a 40 PE is too high a price to pay for Tata Power. Now, of course, if you see it as a renewable energy company over the next 5-7 years, then valuations and your perspectives might change. So I don't see the stock actually collapsing from here, but I think some correction and consolidation, time-wise at least, from 240 might be in order given the very sharp run-up that the stock has seen.
All right, and here's one from Rajat Verma as well. He's also got a query coming in for a stock in the financial space.
Hi Udayan, I have 2000 shares of Bajaj Finance at an average price of rupees 6000. Should I hold or book profit? Thank you.
Well, Bajaj Finance has been an evergreen financial stock, quite like HDFC Bank that we've been talking about. Execution has been absolutely exemplary for that company. And our recent interactions with the management also suggest that they have got a real plan in place to combat the challenge of fintechs. In fact, Bajaj Finance's comprehensive app is out in February and March next year, which will lay out the blueprint for the next level of performance from that company. It's never paid on hindsight to be selling out the Bajaj Finance stock. While it is an expensive stock and continues to be at 10 times price to book, the better decision has always been for investors to accumulate the stock whenever there is a correction, because the stock can be volatile. In the past, it has given corrective dips of even up to 20%, 25%, and those are good opportunities to load up on it. But to sell it has always been, in the past, looked like an unwise decision on Bajaj Finance. So this is one of those names where, given the quality of the management and given the constant innovation that the company keeps doing, I think it may be one to hold on for the longer term and see how the story pans out over a 5 to 7 year kind of horizon. No recommendation to buy the stock, of course, but I think it's one of those really well-run companies which belong as a core in one's portfolio.
If you like the video, do like, comment, share and subscribe.